we have to decide how much do we want to find out. So let's say in this case, I want to find out at a level of 7. Okay, so I find that level on my graph and I come horizontally to my gradient line. Where it intersects with my gradient line, I'm going to come straight down to where it intersects with my fuck around line. That there is going to tell me how much I have to fuck around to find out what I need to find out. See, as you can see, the more you fuck around, the more you're going to find out.
GM folks, welcome back to the channel. Pretty insane price action over last night. So let's find out who got the wrong information and subsequently fucked around and liquidated everyone, shall we? If you're excited for this content, make sure you hit a GM in the comment section down below. Keep the positive vibes rolling and let's jump on in. So an update here on Bitcoin after yesterday's crazy price action. You can see from the daily chart here, this was the candle for yesterday, a true Darth Maul. So this is where you have a huge wick to the upside and also to the downside. So that Darth Maul double-ended lightsaber kind of candlestick was printed. Absolutely insane kind of stuff. That was literally around the evening time. I was watching the football. Before the football, Bitcoin, good price. And at halftime, Bitcoin, bad price. So just insanity on the charts there. And this leaves its own story behind. But where are we? What are the lines in the sand here? I've marked out range lows around that 27.2K region. We're currently at 28.9, pushing towards the pivot for bulls. That is still at 29.1 to 29.2K. So we do need to flip that to have a bullish bias confirmed. But the bear line in the sand is here at around $28,000. Below that, bears are back in control. So at this moment in time, a bit of indecision on the charts. We're waiting to see if bulls can give it a full push over this line. So who was doing the liquidating yesterday? Well, it was Mr. Kanav from Jump. So personally, I don't think we can have one bloke liquidating the entire market and doing all that destruction. But let's find out and let's see the perpetrator here.
I started as an intern at Jump building some of the early crypto trading infrastructure. And so when I stepped into the leadership position, it felt incredibly organic. It was like a few minutes of a conversation. So yeah, it wasn't really a grand coordination.
Don't let those puppy dog eyes fool you guys. He has the big red button at his disposal.
The risk-taking appetite is giant. And moving with the resources that Jump can has been a superpower.
So we have the resources to move the markets anon. We also have the superpower to dump the markets anon. And it's a damn superpower anon. He's just letting us know they've got a lot of money and they're playing crypto on a massive scale here. So one of the biggest market makers in the industry, they're obviously an investor as well. But they do seem to be on the other side of a trade here with all the liquidation cascades that occurred yesterday from the big drop down. So this is the statement from Crypto Potato's article. Bitcoin bounces 5% from false alarm panic dump. So the dump was fake news, apparently. So fake news induced bout of panic selling. On the 26th of April, more than $200 million was liquidated in less than an hour. And the move sent Bitcoin prices crashing around minus 8%. Fake news panic selling. The panic selling was caused by fake alerts from the blockchain analytics firm Arkham Intelligence. Cue the bat signal. So the bat signal came in the form of a tweet that Bitcoin wallets linked to the US government and seizures from the Mt. Gox hack had been revived. So that was the bat signal. The funds are on the move. This spooked the markets. This was then posted by a 500,000 follower account. As you can see, misinformation here and bearish headlines travel very fast in the crypto space. Doesn't take a lot for the PTSD to kick in and people to get spooked. Whalewire tweeted, Bitcoin has plunged minus 9% just minutes after Mt. Gox wallets went active for the first time in 7 years. Checkmate from Glassnode posted this. Based on our labels, neither the US government nor Mt. Gox are spending any coins from addresses that we monitor. One of the followers I have, Riley GMI, also posted this. I see no movement in the US government holdings. This is from his Crypto Quant account, showing those 204,000 orange Bitcoins held by the US government. On screen here, we have the erroneous tweet being recycled here by DB. Today was a false alarm, states Mild Deutscher. But at some point in the near future, the US government and Mt. Gox is going to move the coins. Be prepared for when it does. Not really sure what you can do to be prepared apart from have your laptop open with your funds available 24/7, 365. But nevertheless, yeah, probably we do get the alerts that those coins are on the move in the future. But unless you are literally tied to your PC, it's going to be very hard to do anything about it. But one thing you could do is actually follow the likes of Arkham, because clearly some of the big trading firms here are using them for their own alerts to actually make actions on chain. So maybe setting notifications to on for Arkham Intel would be a good thing. They did tweet this to clarify the situation. A bug fix deployed today caused alerts to be sent erroneously to a small subset of users. Presumably that small subset of users were market-making firms like Jump. Jump then did this. Cue Kanav's big red button. In the past hour, Jump Trading deposited a total of 26.6 mil of Bitcoin to various exchange deposit addresses. The main exchange deposit was to Binance. Jump sent 24 million of Bitcoin there. However, they also sent 2 mil to OKX and around 800k to Bybit. So if you were trading on Binance yesterday and you did get liquidated, your longs got liquidated, it was probably Kanav and team here. 200 mil liquidated in 1 hour. Upwards of 90% of liquidations were longs. And it states, in fact, 97% of liquidations on Binance were leveraged long positions. So Kanav sends the bulk majority of the Bitcoin to Binance and liquidates 97% of longs on the exchange. So a quick TLDR on what happened yesterday. Arkham sends out an alert regarding the US government Bitcoin holdings. Jump therefore nukes the books based on the alerts. Books are thin. Global open interest therefore comes down 15% as longs get absolutely rinsed, but the alarm turns out to be false. Welcome to crypto, says Hasaka Trades. So that quick story is what is depicted on the chart here. Pulling this out to the 4-hourly chart, you can see the staircase up and elevator quickly back down there. Now, a quick word on the liquid staking derivatives and ETH staking landscape here. I did want to mention this as this is something that's probably going to go off the radar here, but I do think there will be opportunities to just realize what is happening. So if we go to DeFi Llama here and you can see the liquid staking derivatives, how much ETH is staked with each of these protocols in terms of TVL, you can see there's starting to be a bit of a change here. So Lido has an obscene amount of staked ETH, 6.1 million in total. Over the last 30 days, though, they haven't seen that much of an inflow. 5%. Yes, it is quite large in terms of the numerical amount there, but the major competitors here, the likes of Coinbase, is actually drawing down the amount of staked ETH on there, and it's going to more decentralized protocols like Rocket Pool here, up 25% in the last 30 days, and then Frax up 30% in the last 30 days. So we could potentially be starting to see market share moving from Lido into these participants down here. And this is something that's been spotted by others as well, including Hal Press, who posted about his bearish thoughts on Lido here. And he's saying, look, some of these VCs that are invested in Lido are actually dumping their tokens. Multicoin Capital dumped 1.38 mil. And this seems to be a bit of a trend here. Other VCs who got early round participation for Lido have been dumping their tokens on mass. So could this be a changing of the guard? I tweeted this out. Interesting LSD developments. So just think about mindshare right now. LSD does not have the mindshare. That peaked at Shanghai, and now we're kind of having, a quieter period for the LSDs. Now, Lido's unstake comes in May or June. So currently, Lido stakers cannot unstake their tokens. They're waiting for the V2 update. That comes soon, and May or June, they'll be able to actually start pulling coins from there. So you could see a rundown in TVL of Lido. VCs are, typo there, giga dumping their bags. Staked ETH, the ST ETH, likely finds its way to Rocket Pool and Frax as the big winners. This likely pulls down the price of all LSDs short term, but out of that fire, Rocket Pool reign supreme. Now, I would mention Frax there putting in 30% gain, and what they are able to do because they own a lot of Convex and they can incentivize a load of emissions to make Frax staking one of the most lucrative in the business. They're obviously a key competitor here. So these two are definitely ones to watch. But wider on my landscape as well, something that people don't know too much about, but I did a video on SSV, Distributed Validator Tech. SSV's DVT enables trustless staking through multi-operator validation, greatly reducing the risks of slashing and downtime while eliminating single validator as point of failure. So there's been some progress between SSV and Lido here. So I think what we're going to see is a true partnership between the two, because the main issue with Lido is the fact it is very centralized, but DVT actually distributes validator keys and ensures more decentralization of the network. So they're going to have to employ SSV, I believe, here. And the fact that this is on testnet currently is a bullish thing. So you've got around 11 billion in TVL over at Lido, which could start to be secured by SSV once it hits mainnet. So I would check out my SSV video, because 11 bill of value being secured by a market cap company of just under 200 mil does seem a little bit odd. And then we pull this out. Of course, this peaked back here at 50 bucks. And like with anything in crypto, I see this time and time again. When things peak, we typically get a full 50% retrace. And that happened yet again with SSV down to 25 bucks. So over the next month or so, as the LSD mindshare really evaporates and people move on to the next shiny objects into the room, I'm looking for this to really bottom out and then make a bigger position in SSV, because this could be one of the key contributors to staked Ethereum being decentralized. So drop me a comment down below. Did you enjoy today's video? Get the GMs rolling just for the positive vibes. Subscribe if you're new, guys, and I'll see you in the next one. Peace.
Liquidation.